The Federal Reserve FOMC meeting just changed the trajectory of cryptocurrency, and many altcoins off the back of Jerome Powell's speech ended up taking massive dumps over the last 24 hours. So in today's video, I'm going to discuss the implications of what has happened over the last day and also discuss what you can do right now to put your portfolio in the best position to succeed over the next few weeks and the coming months. I do believe it's going to be a really pivotal few weeks for crypto here, and we're going to be diving into the dynamics at play in the market in today's video. I also have used this recent dip as an opportunity to position myself in a couple of new trades, which I'm going to speak about today. And I'm going to answer the questions of, should you be de-risking now? Is it time to take advantage of this dip and actually buy coins? If you are going to buy coins, which coin should you actually look at buying? Because not everything, in my opinion, does look good to buy right now. So we're going to get into all of that and more in today's video. If you do enjoy this type of content, make sure you do subscribe for daily crypto updates, because it is going to be, I think, a very volatile next few months in crypto. Volatile both to the downside and to the upside. So you definitely need to make sure you have your finger on the pulse due to the fact that the market is so choppy at the moment, which does create opportunities, right? But you really need to navigate this in the most diligent way possible, because it's very easy to get chopped up in these market environments. So clearly, many altcoins are down, but let's firstly, before we go into the alts, discuss why this actually happened. And basically, it was off the back of Jerome Powell's speech. The S&P 500 fell sharply, and the Fed cut rates, which was expected, by 25 basis points. However, the hawkish tone that Jerome Powell used and some of the comments that he made did end up with the markets reacting negatively, because there were signs that inflation is coming back. And off the back of that, the predicted rate cuts for next year dropped from 3 to 2, whilst they raised their inflation expectations from 2.1% to 2.5%. And the market reacted negatively to that hawkish sentiment, which resulted in the S&P pulling back into this trend line, which actually, by the way, looks completely normal. If you look at the S&P right now, there's nothing to really panic about. Every few months, it does get pullbacks like this. We had one on August 1st. We had another one on the 31st of October, and now we're getting another one now on the 18th/19th of December. So it is normal for the S&P to pull back, but obviously because crypto's run up so much, the second the market starts to retrace a bit, crypto acts a lot more violently. And this is always going to be the case, especially in a bull market. When stocks pump, crypto generally pumps a lot harder. And when it pulls back, crypto generally dumps a lot harder. So if this is your first cycle, if this happens to be your first rodeo, I want you to know that this kind of price action is completely normal. It is completely normal for altcoins to drop 20 to 30% in a day, potentially, in a bull run. It is completely normal for Bitcoin to have massive pumps and then retrace, and alts going with it. This is normal price action. However, there are some concrete changes to the market dynamics which I think have happened over the last 24 hours, which we do need to discuss, because I think it has slightly changed the trajectory of the markets versus, let's say, what I was anticipating from 1 week ago, and we're going to get into that. Looking at Bitcoin right now, it is sitting around $100,000. Actually, in the past couple of hours, it started to dip back into this trend line. Technically, this is still a higher low for Bitcoin, and it is still exhibiting bullish momentum in terms of the general uptrend that it's in. I really don't want to see a break below 100 though. I think if you start to hover below 100 for a day or so, then Bitcoin could easily pull back to 95K. So what we really want to see is Bitcoin holding 100K. That's going to be super, super important to watch. The markets are likely going to be shaky over the next few days, and I am expecting a bit of choppiness, very strong rebounds, but also strong sell-offs. So just keep that in mind. But Bitcoin technically yet has not made a lower high and has not broken down, despite retracing a lot of its gains from 107 to 100. I mean, let's just remind ourselves right now that Bitcoin is still over $100,000. We have a $100,000 Bitcoin, and the sentiment has really taken a turn for the worse. I mean, sometimes it really surprises me how quickly sentiment in crypto shifts. I mean, just 8 days ago, everyone was euphoric. Everyone wanted to FOMO into AI coins, utility coins, XRP, and now all of a sudden everyone's panicking again. It's kind of crazy how we get these sways in the market. And I do think the volatility in the market increases as more retail participants enter the market because they aren't necessarily as experienced as some of us. So obviously these swings are going to affect this market sentiment more so, and you are going to see more panic, and that actually ends up reflecting on the chart. So the deeper you go into a bull run, the more retail that's onboarded, the more violent the volatility becomes because A, you have more trading volume, but B, you also have a lot more normies trading against more seasoned veterans, and that does lead to shakeouts, manipulation, and just more panic generally on red days. So let's summarize what the meeting actually means for crypto, because I've seen a lot of opinions flying around, but let's just talk facts today about what Jerome Powell actually said and how I think this is going to impact crypto over the next couple of days, but primarily over the next few weeks and months, because I'm not really a low time frame trader. I'm more interested in how does this affect the way that I position heading into the month of January and beyond. So Jesse summarizes it well here. Number one, the Fed delivered a hawkish cut. This is pretty much where they still cut rates, but they include certain terminology that implies hawkishness or reduces the likelihood of future cuts in the market the following year. And also some of the comments about the expectation for inflation to increase did catch the market a little bit off guard, because obviously if inflation is anticipated to increase, the Fed might not have the license to cut rates as much due to the fact that that could only cause further inflation. But this is a tactic that Jerome has used in order to quell markets in recent times. So they're kind of playing on a bit of a knife's edge. They're trying to keep the markets cool-ish whilst also stimulating the economy. So then that's where you get leeway for some of these comments to come in. And that's where you do see market reactions like this off the back of that. It is quite normal. We saw it multiple times, especially in 2022, 2023 as well, when macro was a really prominent factor. I think in recent months, macro has taken a back seat. This is one of the only FOMCs in recent times that I would say have been a burger instead of a nothing burger. Because recently, I even expected this potentially be a nothing burger. Obviously, I saw on the charts there was a bit of de-risking, like I highlighted in yesterday's video prior to the event, but we actually haven't had a concrete market reaction of this magnitude to an FOMC in quite some time. So macro is definitely important. And the reason why I think it's become a little bit more important is because we've kind of exhausted the Trump trade somewhat. So anyone that wanted to position off the back of Trump's victory has now had time to position. So the market is now looking for that next catalyst, that next potential tailwind to spur it on to new highs, given the fact that the market has already rallied quite aggressively. So now macro became a little bit more of an important factor because the market's looking for that next bullish or bearish signal off the back of the Trump trade. Whereas if this FOMC was a month ago, the market probably would have continued ripping higher because there was still a big Trump trade to play out. And I think that's why we saw this actually affect the market a little bit more than people, myself included, expected actually heading into the event. Number three, the Fed's dot plot projected another 50 basis point of rate cuts in 2025, which would take interest rates to 3.9%. Number four, Fed officials said risks to employment inflation goals are now in balance. 5, the Fed statement said that the FOMC is strongly committed to supporting max employment, 2% inflation. Now, I am personally not a macro expert, so I'm going to save the majority of my opinions in today's video to focus on my crypto strategy and altcoin strategy. However, in the Mars High Club Discord, we do have a macro expert who helps the members during times like these, and that is Fabian. So let me read out his post from last night in his market commentary channel as to what we should take away from this FOMC. Fabian said, Powell tried to balance out the hawkish projections by stating that the actual outcome would be entirely data dependent and we shouldn't rely on the projections too much. But his words were still seen as hawkish and conveyed that the Fed is trying to tell markets that they will be moving slower from here. At the end of the day, it sets the bar low for a positive surprise down the road, and markets will find their new equilibrium, then move on in a week or so. I think we'll have a couple bounces between next week and New Year's, but also think that this put us squarely in choppy waters until the second half of January, when also considering seasonality and MicroStrategy's blackout period. Now, I would actually agree with what he says here. I think ultimately what the FOMC did is not necessarily cancel the inevitable. I still think the seasonality is extremely strong. The trend is extremely strong. I still expect altcoins to be much higher next year, but I think what it did is it delayed things slightly. Now, this can actually be looked in two ways. It can be looked as a bad thing if you're impatient, but it could also be looked at as a good thing because it's buying you time to accumulate and reposition, which is very important if you know the destination, and it also prolongs the bull market. And typically, the longer you can prolong a bull market, the bigger the gains will actually be because you have these opportunities during events like this to actually flush out the weak hands and increase the sustainability of the market. So I actually view this dip as a good thing because it's actually flushed out a lot of the leverage in the market, the weak hands in the market, and it also sets us up for a potential, as Fabian says, positive surprise down the line. So I'm all in favor of a slower yet longer bull run, and I think what this has done is potentially delayed things by, let's say, 2 to 3 weeks. That is my rough estimate as to how this has actually affected the market. So it has changed the trajectory of the bull run, but it hasn't changed the outcome of the bull run, which in my opinion does create opportunity. And that's what we are going to discuss later in today's video, what some of those opportunities actually are. Fabian ends by saying, if correct, the way to play the cooldown periods in the middle of a bull run is to slowly accumulate strong assets when things become oversold and don't overtrade or capitulate on deeper red days. Really no need to rush anything. I'll probably be posting less trades as a result, which is also good timing with the holidays. Now, there are two types of dips in crypto. There are big leverage liquidation driven cascades, which happen really quick and very violently. And then there are more spot selling days. Now, I think this was more of a general de-risk / spot selling capitulation day rather than a leverage liquidation event, just based on the data, because the biggest leverage event, a liquidation event, was actually last week on Tuesday. Now, the big liquidation events, these events are typically the strongest risk-reward buying opportunities in the crypto market because typically, after a massive liquidation cascade, the market will bounce quite violently, which increases your chances of being profitable very soon after the dump. What happened today, which is the second category, is more of a spot-driven capitulation event. Now, these events can still be great buying opportunities during a bull run, but they are slower in terms of how they rebound. And they typically don't last a day or half a day. You may see bounces, but these typically last a matter of days. Hence why I say this may have delayed the bull run just slightly. Now, they're both good accumulation opportunities in a bull if you think prices are going higher like I do. However, there's less of a rush in these kind of events as there are in those very quick liquidation events where you need to act quickly in order to get those quick gains. So I have started to ladder in today, and I'm going to show you exactly what into later in today's video. The market actually showed us some coins that are really strong right now, even in the midst of a dip, which could outperform over the coming weeks. But I don't think there is an insane rush compared to if this was a big liquidation event, if that makes sense. So I think Fabian's analysis in the Mars High Club was spot on. He also has an AMA on Saturday if you guys want to ask him any questions pertaining to the macro side of things or potential directionality off the back of FOMC. So make sure you do join that if you're in the Mars High Club, because I think that's going to be a really, really good one. We also have another 6 mentorship live sessions over the next week. We have 8 sessions on average per week to help you guys as the markets unfold. I know Doc actually went live, who's our head high time frame trader, in the Discord yesterday to help people during a time when everyone was panicking. So we are here to support you, and we are here to help you navigate these periods, because I believe that's a really, really important thing, especially if you're new to the market, where you may not necessarily be as experienced with navigating dips and major pumps, because both are challenging in different ways. For Jal says here, everyone will forget the jaw burning in 5 days. Pause in Jan has been priced in for a while. No meeting in February. This is max FOMC attention for the next while. I do agree with this comment here. That's why I'm showing this tweet. I think what usually happens with these macro events is that once the markets digest them, they price them in over the coming days and weeks. And then what typically happens is the markets move on. Markets are forward looking. Once this news is digested, they'll start to look towards the next catalyst or the next major event. And I don't think FOMC/macro will be a big focus potentially until the next FOMC at the end of January, and then there's no meeting in February, so the market has a little bit of headwind after that. Easy financial conditions will continue to drive things once the jawboning gets digested, same as it ever was. Because although you do have maybe the slight inkling of hawkishness now starting to creep in to FOMC, at the end of the day, we still are in a monetary easing environment. Trump is still going to be the president. We are also seeing the M2 money supply increase, although it has decreased a little bit over the past couple of months. The general macro trend for that is up. Global liquidity has also been increasing, and equities are in a raging bull run still. So there is this macro, and obviously macro strategy and the ETFs and all of that demand has also crept into the market. So you do have the macro side of things underpinning the crypto market in general, and also the stock market, which I think longer term will hold the market in good stead for future gains. But it may just be a little bit of a choppy period as the market actually digests this news. I'm actually noticing at the time of recording this video, although the market's rebounded strongly overnight, we are starting to see a little bit more of a dip again as stocks start to show weakness in the early hours of the US session. So that's going to be something to monitor throughout the day. We're going to take a look at some of the charts in a couple of minutes here and talk about whether there's any opportunities in the market right now. And I'm going to be uploading this video pretty much straight after I record, maybe within like an hour to 90 minutes afterwards. So the chart should be fairly accurate, but just remember things are volatile and they're moving very, very quickly at the moment. Alex Kruger, he is another macro analyst. He's had some good opinions on the events of the last day. He said euphoria and leverage have been largely flushed out from crypto already, which should minimize the downside. I'm still max long spot, but have partial short hedges on, presumably for the short term. Bigger picture unchanged IMO. That's the really important thing. I don't think this changes the bigger picture, only the short term. The US economy is in great shape. Trump is coming, and now there are less cuts priced into 2025. Good luck trading. You can see obviously a lot of the funding in the crypto market has been wiped out. When you don't have really aggressive funding and a lot of leverage in the market, this does reduce downside risks slightly versus if we were in frothy territory, then you could maybe continue to see 20 to 30% drawdowns. I think for that reason, the floor is slightly limited. It doesn't mean alts can't go down even more. They can maybe go down another 10 to 15%, but I don't think we're going to see like crazy, insane drawdowns because a lot of those big leverage flushes already happened last week, and then the last blow essentially happened yesterday. So what I said here is basically summarizing my opinion. FOMC changes short-term trajectory, but it doesn't impact mid to long-term trajectory of the bull market. If you were sidelined during the last rally, this is a great opportunity to scale into quality projects you missed. We're going to discuss some of them today. My opinion, generally speaking, is that this is a good dip for buying. It's not a dip to ape into, but it is a dip to DCA into. And if you are completely sidelined from the market, this could be a really powerful place to actually start entering, especially if you've been FOMOing over the last few weeks, seeing prices rally. You can see the altcoins, obviously, they didn't respond too well. Let's run through some of them now. Over the past 24 hours, I'll just refresh this. You can see that a lot of the memes are significantly down. I think at some point, a lot of them were down like 15 to 20%. Some DeFi stuff is down just across the board. Many of the majors are down, not 30, 40%, but just 10, 15%. Some on-chain stuff is down 5, 10%. It's funny because a lot of the utility coins, which we're going to discuss soon, are actually still showing relative strength. They're not down a lot, but it certainly isn't a good day in the market with many alts retracing the gains from the last 3 weeks. So generally speaking, to summarize the dip, it's basically taken us back to the end of November. If you look at most altcoin charts, with the exceptions of the really, really strong ones, it's basically taken us back a few weeks in terms of price action. Now, like many of you, my portfolio also got smoked. I had a couple coins, like for example, CHEX and CPOOL and some of the utility coins, which we're going to discuss, actually holding up quite well, which helped me soften the blow. But my meme coins mostly were the coins that got smoked, and everything in general got smoked, whether it was my Bitcoin or my Ethereum or Solana. Everything in general took a bit of a drawdown in terms of paper value. But what I have learned to do over the last, I guess, few years in crypto, but specifically this year, is actually detach my feelings from the number on the screen, because the reality is your losses and your gains aren't actually losses or gains until you realize them. Until then, they're simply paper profits or paper losses. So you can't get too attached to that number on the screen because that number isn't real until you actually execute the trade. I even go so far sometimes as to create 2 net worth spreadsheets. So when I evaluate my net worth, I have one which is like liquid and one illiquid. And the illiquid portfolio often contains a lot of my liquid crypto holdings just because I like to differentiate those 2 numbers so I don't get too attached to my portfolio. Doing that has actually helped me brave market situations like this, where on a day like today, like I have lost a lot of money, significant amounts of money, but I'm actually able to brave these events, because I've been in the market for a long time and I'm used to it. Anyone that went through Luna can handle a 10-15% correction on majors. However, I do think the more you can detach yourself from that paper number, the better, because it's just going to make you emotional. And that number doesn't matter. If your plan is 6 months, if your plan was to ride this entire cycle, if you have a long-term market strategy, then what happens today is actually so irrelevant. I haven't actually refreshed. I'm being completely honest here. I have not refreshed my portfolio since yesterday. I haven't looked at it. I've looked at individual coins, but I haven't looked at the portfolio value because it's not really healthy for me. It doesn't make me a better trader, looking at how much I've lost or looking at how much I've made. Some days, even on the really bullish days, I don't always check my portfolio just because it's not really healthy. I look at individual positions, I look at individual trades, but you don't really get any major benefit from it apart from like, oh, hey, I lost a lot of money. Oh, hey, I made a lot of money. It's all paper money. So just keep that in mind whenever you're getting a little bit too attached. That number's going to go up. The number's going to go down. That number doesn't define you. That number doesn't really mean anything until you actually exit a trade. I did get a lot of text today from retail though. Very scared retail. On my Discord, many members were scared. And the YouTube comments, many members were scared. My Twitter comments, many people were scared. There were a lot of people that were quite worried. I want to read out this text. Should I hold or sell my XRP and Doge right now? I entered right after Trump election, so this is my first bull run. I feel like many people, this is their first bull run, or at least their first experience since 2021. I haven't seen a dip like this before. That's an interesting line there because I've seen dips way worse than this. Even last week, although it was short, it was actually a bigger dip for many coins in terms of percentages than this even. But I'd rather get out now than lose my money. If it goes down and most people have confidence that it'll go back up in January, I'll hold. This line's interesting. I'd rather get out now than lose money. I think that's the reason I'm showing this is because this is a really retail person that messaged me. It's not a bad thing, by the way. They're just not experienced, right? They're a friend of mine that hasn't been experienced in the crypto market, but is getting more involved in the market. And I think this summarizes how a lot of retail feels right now, which I think is actually valuable context because it helps us understand like why these dips actually happen. And it's because a lot of people are now in the market that aren't that experienced. And days like this is where they get shaken out. So if you are new, please do not get shaken out of an event like this. If anything, look at it as an opportunity to scale into high conviction tokens. I already have a lot of crypto exposure personally, but if I were completely sidelined right now, I'd be scaling in like a mad person. Bull market dips generally are blessings. And you'll probably realize this in a few months. You'll look back on dips like today, because you don't get that many of them during bull markets. And these are typically the best opportunities to position. The only time that you would maybe not consider buying this dip is if A, you're either ridiculously overexposed, or B, you genuinely don't have belief that the bull market's going to continue. If you think this is the end of the bull, then obviously you don't want to buy. But if you think, like me, that this is not the end of the bull, then it's a great buy. And I've been using this as an opportunity to add to some positions that either I want to make them bigger because I have conviction in them, or positions that I missed. And we're going to go through all of those in today's video. I'll never really understand the market psychology of the crazy FOMO that we see on pumps like 8 days ago and the extreme fear on dumps, because the thing is you actually need cheaper entries to make bigger multiples in the bull run. The cheaper your cost basis, the cheaper you're able to position, the more money you'll make. The higher you FOMO, if you're constantly top blasting into coins, the less money you'll actually make because your cost basis is bad, which is going to limit your gains. Which is why I always say, buy on extreme red days. This for a bull market is an extreme red day, by the way. And sell or take profits on extreme green days when you see crazy pumps. What was the most green day of this bull run so far? It was 8 days ago. That's the profit taking day. And what's the most extreme red day that we've had in the last month? It was today, apart from that liquidation week. Both of them were buying days. If you can reframe your thinking like that, you're going to do a lot better in this market versus FOMOing. The only time you should really be top blasting a token is if either it's really low in market cap, so it doesn't really matter what you buy in at, or if you're a trader and you have a strict invalidation. So you can have a system where you're getting into a trending token, sure, but you need to have invalidation for that trade. Otherwise, if you're just buying for your spot portfolio, you're putting yourself in an awkward position because you're taking on a lot of risk by top blasting a coin. Now, what's really interesting about altcoins at the moment, like Eric Crown points out here, is that Bitcoin dominance is potentially making a lower high here. So although dominance is pumping because alts are performing worse than Bitcoin, obviously, because they sell off more aggressively because they're more risk on, this, I think, could actually end up being a lower high. Now, yes, it could maybe squeeze a little bit above before it puts in a lower high, or maybe it does it here, right? But if it does make a lower high, then you can probably expect a lower low. And just based on the time that it's taken for Bitcoin to put in new highs and new lows, like, for example, this move from high to low took about 18 days, and this move from low to the current level took about 20 days, and maybe it takes another 30 days, right, to finally reach its peak. Let's say it does take another 20 days, which is taking like the average here. Then 20 days from now puts us in beginning to mid-Jan. And 30 days from now puts us towards the end of Jan. And that would be a period to me, like Fabian pointed out, that does make sense for an altcoin rally. Now, before I was thinking maybe really early Jan, or maybe last week of December, because that is what seasonality typically suggests. And although this could still happen, if Bitcoin puts in its lower high right now, I think the peak of the next move is probably not going to happen till the end of January, just based on rough timeframes here with Bitcoin dominance. But the first thing you want to see is the Bitcoin dominance lower high being formed. And there's nothing to suggest that it won't be formed. I mean, this price action is actually bearish because this isn't a full reversal until it clears the previous high. Until then, this simply looks like a deviation / bearish retest before more downside. So by now you know what my opinion is. I think this is a good opportunity to start scaling into high conviction tokens. So let's actually look at my accumulation list. What are some of the coins that I'm looking at? Now, a few of these I personally DCA'd into over the last 24 hours, and I want to give you a full update on these coins. The first segment of coins that I want to look at are the coins exhibiting relative strength. So which coins during the dip, after the dip, when we saw the recovery, and I know we're starting to retrace a bit now, but when we did have that first recovery bounce, what actually performed the best? Because these coins are likely going to be the strongest bouncers when we do see that eventual altcoin run in a few weeks' time. Not every single coin from this list is necessarily programmed to outperform, but the market is giving you a pretty good indicator of what may outperform. And you can actually spot a lot of these by just going on to Bounty Bubbles and looking at what's green in a sea of red. You can see Move, Mantle, a lot of the DeFi-related altcoins, even Pulse Chain. Now, looking also at the coins that are down a little bit less is another good indicator. The memes are down the most. Pepe, Whiff, a lot of these are down a lot. Floki, but coins like Aptos, Sui, these aren't down as much. Now, a lot of these coins are from the hottest narratives in the market, like utility, like AI, like RWA, because these are the sectors right now which have the most mindshare. For example, this coin that I recently added to my portfolio, which I shared in the Discord recently, this is actually performing quite well despite the market dip. It actually ended up, after the initial dip, recovering quite strongly back to yesterday's levels. This is the coin that I mentioned a couple days ago that I was going to be sharing in the Discord because it's a new AI position that I recently took off the back of some really interesting findings. You can see part of my thesis. I've blurred out the ticker because I want to keep that for Mars High Club members just for now. But you can see that there's a really interesting narrative behind this coin, and it's only sitting at around a $75 to $80 million market cap right now, which I think makes it, in my opinion, a decent risk-reward proposition, especially if you think AI is going to continue to perform well. And the relative strength does suggest that it is a coin that whales and serious players are actually bidding if you do look at the on-chain data. So there's a link in the description below to access the Mars High Club. If you do want to read the full thesis for this coin and get access to all of my latest alpha, which I do post in the alpha channel, I think that coin's going to do really well. It's sitting around an 80 million market cap, Personally, I'm targeting around $500 million. Could go into the billions, but I'm trying to be pragmatic. My first profit-taking event is going to be around $250 million, and then my major profit-taking is going to be at $500 million, but I genuinely think it could go to $1 billion plus. So if it does go to 500 from the current level, that's roughly an 8x, which would be pretty nice. And I think as the market recovers, AI is definitely going to be one of the sectors that does, and this has some really big names involved. Big creators, VCs, and it actually looks like there are some Oxford PhD students who are behind this tech. So if you want to read the full thesis, it is in the Mars High Club Discord. Let's look at some other tokens which actually rebounded quite well. Yes, a lot of them are now starting to show signs of weakness again, but what I'm really looking for is that couple hours of price action post-dip and what actually bounced the strongest. The first one is Athena. It actually looks really strong. I think this is one of the strongest tokens in the market right now that on dips is probably going to serve you quite well because it does have a reflexive flywheel. The higher funding rates go. Funding actually did have a bit of a reset, which is why it's cooled off a bit from the top. The better the ENA token actually performs due to its flywheel. Rune is a really similar token. These are quite decent bull market bets as they're spot bets, but they almost take on leverage because of how their tokenomics are actually aligned. So that is one that is performing well. Mantle is another one. Look at how it ate up the dip. Looking at the 3-day here, it pretty much ate up that entire wick. It looks really, really good right now. I'm not sure exactly why, but it looks good. And it's a token that I have been invested in for quite some time. So this is one of note as well under the infrastructure category. Move is another one that I can't deny when I'm looking at tokens that responded really well. This is the 4-hourly chart, not the 3-day chart. And it's actually up versus where it was yesterday, despite, it's one of the only green gainers on Banter Bubbles, despite, you can see it here, the market obviously having a major pullback. It's pretty hard to ignore Move's strength. Just from a trading perspective, fundamentals aside, this is one that could be an interesting long from a trading point of view. Hyperliquid is another one that, look, everyone was complaining that they missed it when it was around $30. It wicked down to 21, but it rebounded really strongly to 27, almost ate up that entire dip in a matter of hours. Now it's starting to pull back again. This could be an opportunity on the second pullback because it's already exhibited that strength to bounce strongly when the market does have a little bit of a bid again. So Hyperliquid is one that I would be looking into as an opportunity. I'm bullish on this over the coming months. $50 to $100 is my target, my conservative target. I think as an infrastructure play, it's showing all the right signs fundamentally alongside the technicals now, exhibiting a very strong rebound. You can also see that in the past 48 hours, the Hyperliquid Assistance Fund has purchased an additional 150,000 hype at an average price of $25. That's $3.7 million of buy pressure in 2 days and $686 million a year when annualized. The Assistance Fund receives USDC from fees generated on Hyperliquid and uses it to buy hype. So it has that flywheel because the more revenue the platform generates, the more traders, and this does ramp up in a bull run as more people are trading, the more buybacks that happen on hype, the more buy pressure, and people obviously will front run that, similar to the Bitcoin micro sailor front running, which does create bullish market conditions, which is why I think this can be a powerful coin that continues to move to the upside. Now, the other sector, aside from infrastructure, which is performing really well, is RWA. And RWA are kind of your quintessential utility altcoins when it comes to the narrative this bull run. In fact, if you do look at the vice president of the United States, or soon to be vice president, JD Vance, he's publicly stated that he's super bullish on utility tokens. We obviously know Larry Fink is really big on asset tokenization. We know that Trump is involved, or at least his family is involved in DeFi. RWA right now, from a narrative point of view, is just so perfect for the next few months of crypto, which is why some of my biggest positions are in RWA. Now, Mantra is showing a lot of strength during this period. CHEX is showing a lot of strength during this period. Yes, it's pulled back like a lot of other coins, but the uptrend is really, really strong. They actually just announced a $124 million tokenized real estate cash flow for multifamily rental properties tokenization. So they just keep on tokenizing more assets pretty much every week. We're seeing more announcements. And that's basically because they have the infrastructure. They're the Shopify of real world asset tokenization. So their white label solution allows pretty much anyone to take assets and tokenize it on chain. And that's all done by Chintai, which is powered by the CHEX token. So that's doing really well. Another one that if you just look at the bounce from the dip, that bounced really strongly from 40 cents to 53 cents, which is a pretty crazy bounce given market conditions, was Clearpool. So the RWA tokens and the utility tokens are the ones that bounce the strongest. So I don't think the market is giving you any information to suggest that utility won't still be the strongest performing sector over the next few weeks. Memes were actually the worst performers, and they were the worst to bounce. So the market is still telling you, we still love utility when the market's hot, and we still don't love memes. I'm going to actually talk about what I'm doing with memes in a few minutes' time, but clearly for the next few weeks, utility is still going to outperform. You can see that ClearPool also announced the Ocean Poseidon testnet, which is now live. This comes ahead of their mainnet. They're actually doing an early adopters campaign on Interact if you want to potentially win a slice of the $6,000 USDT prize pool. Ocean is going to be an RWA-focused blockchain, similar to what Mantra is doing, but it's ClearPool's version. And this makes it even easier for dApp deployment on ClearPool. It makes it even easier for capital to enter the ecosystem. It's going to be much better for liquidity. That's going to be really, really good. And obviously the testnet is now live, which is a major step towards that. And obviously the testnet is now live, which is a major step towards that. So these are some of the tokens that actually performed really well in the face of adversity. And as I said, it's a strong sign utility is probably still going to be the dominant narrative. Now, what isn't the dominant narrative? It's memes. Memes got absolutely smashed. They were some of the worst performers over the last 24 hours. From all-time highs now, a lot of these are like 50% down. Peanuts down 65%, Popcats down 58%, Whiffs down 51%, Bonks down 49%, Mew 49%, SPX 43%, Mog 36%, Giga 36%, Brett 36%, Pepe 29%, Doge 25%. So is it time to start taking advantage, or is the meme run over? I personally believe at some point this cycle, meme coins are going to come back. I still have conviction, especially that Doge is going to perform really well this cycle due to the Department of Government efficiency narrative. And if Doge comes back this cycle, I do believe that is going to create the wealth effect, and it's going to bring the narrative back for the other meme coins as well. I think if you're looking for any meme coin catalyst, it's Doge performing well. But even generally speaking, memes have been the strongest performing narrative this cycle percentage-wise. That's quantifiable, proven data. I don't think that is going to change in the second half of the bull run. It's only cooling down for now because they ran so hard and utility has the stronger narrative. So in terms of short-term bias, I would rather be in utility if I were trading. But in terms of long-term positioning, it may be worth starting to look at adding the meme coins back to your portfolio. Now, I already started doing this a few days ago. I talked to you about it in a video. But now with the recent dips, I've actually started to ramp up my DCAing into these coins. Now, as I mentioned earlier, you're going to have to be patient because this isn't a dip that you need to rush into buying. But it is something that if you missed the meme coin run earlier in the year, you can actually utilize to capture the next meme coin run. So let's run through a few of these memes now and take a look at their charts. Popcat is absolutely crazy. It's gotten absolutely smashed. There is this whole IP narrative which is starting to brew, which is one of the reasons why Peanut is doing really, really badly, because I think they're being sued for the IP. So I think tokens that actually have their own IP, they're going to be the strongest meme performers. Looking at a token like Mew, they have amazing IP, custom graphics, an amazing ecosystem, a very novel idea, a cat in a dog's world. And for that reason, I think as this IP narrative continues to hurt tokens like Peanut, eventually this can benefit really well for tokens like Mew. I think Simon's Cat is another one that has its own like custom branding and owns its own IP. These are actually the tokens I'm most excited about right now. So Mew is definitely one that I'm adding to my portfolio. I actually like Popcat just because it was performing really well and it's being heavily, heavily smacked. I'm not a massive fan of Peanut personally. I think there are major headwinds there. So I'd probably prefer Mew out of the two here. I also like Whiff. It's starting to deviate below this low, but these are crazy discounts you're getting now after a Robinhood and a Coinbase listing, down 53%, which is wild. Mog as well has been hit, even though on the chart it actually looks a lot better than a lot of these coins. It's still now sitting down 41%. This is another one that I'd look to scale into. I mean, that's obviously a super recognizable and unique meme coin in the market. Now, Pepe, the big Pepe, is starting to come back down to this level, which I think could be an opportunity. I personally think Pepe Coin, which is the OG Pepe, which was created before Pepe, might even be the better long right now, because this has also come down quite a lot. From its recent local high, It's now sitting down 54%. From the high earlier in March, it's down 64%. And Based AI are about to come out with some of their biggest updates of their entire life cycle as a project. And Pepe Coin, I think, fits a unique narrative of being the OG Pepe. And I think that narrative in this market can be quite powerful, which is one of the reasons I'm actually continuing to add to this position here. I think this will do quite well and offers probably more upside on the bounce than the OG Pepe. So these are some of the memes I'm looking at adding right now. Another one is Lucky. I still have a lot of conviction in Lucky, similar to Pepe Coin being the OG Pepe. Lucky is the OG Doge. Doge actually forked from Lucky's source code way back in the day. Lucky is originally created months before Dogecoin. And I think the Lucky symbol, the premise of luck, especially heading into Chinese New Year and St. Patrick's Day early in next year, these are very strong tailwinds for Lucky. And the thing is, it's still not on major exchanges, right? It's still only on non-KYC, Albit, CoinX, and Mexi. Like, once this is on big exchanges and people can actually access it, then they can bid this narrative. It's not even on like the major Asia exchanges, which, I mean, I think this really appeals to the Asian community. So when I'm getting questions about like, oh, Mars, what's happening with Lucky? You know, why isn't Lucky running? Why is Lucky dipping? Firstly, every token in the market, every meme coin is down. This is no exception. This is a low cap, so naturally it's going to be more affected. But secondly, people can't actually buy this coin yet. When they can actually buy, that's when I think things will really start to heat up. So I think until then, it's still a great opportunity to accumulate. And I got in around $2.50. I think I shared it in the Discord at around $3.80 and on the YouTube at $9. The YouTube mention's down. I do admit that. But if you did miss that trade or you didn't get enough of a big position originally, you should be salivating now because fundamentally nothing has changed. And that's another message I want to get across. If nothing has fundamentally changed in a narrative or a thesis, but the price has changed, that equals opportunity. If you thought it was a cool concept a few weeks ago when price was $10, now that it's $6, that shouldn't change the fact that you thought it was a cool concept. Unless you were convincing yourself that it was a cool concept just due to the price going up, which is nonsensical. And then you have to evaluate your framework for actually entering these coins. For me, this actually spells opportunity, which is why, as I said, I entered at 250. Now I'm actually very interested in DCAing more. I have been actually averaging more. I even had some limit orders. I think a couple triggered around 550, which is absolutely crazy. Obviously, it has rebounded, but that is one that I also look at. There are a few other memes as well. Zera Bros, you can see, you can pause the video here. Daniel Chuang points out to be probably a good risk-reward bet. I do agree. I think Zera Bro and Goat, they're the two AI memes. Probably not Fartcoin for now, just because it ran up so much, that I'd be looking at. And overall, I think memes are offering an opportunity. You just have to be way more patient with them than utility coins, which are probably going to run first. I won't go through every AI coin today, but there are some which also look like good DCAs. But if you are DCAing here, just be a little bit patient. The macro setup, however, is still clear. We know the data suggests that seasonality for Ethereum and alts typically doesn't kick in until that period between January and May. We're not even there yet. We know that the bigger rallies typically happen post-Christmas, not pre-Christmas. We've also been through that data in recent days. And looking at total 3 now, this is what looks to me like a simple test of the moving average and also a liquidity grab from that previous spike to the downside due to that liquidation cascade. So there's nothing that is giving me alarm bells on total 3. I can see Bitcoin in the corner of my eye is fighting to hold above 100K. We really do need Bitcoin to hold this trend line. I do agree. For alts to stabilize a little bit. If Bitcoin does break down, there could be more downside. But if that does happen, that only probably spells opportunity. I'm probably not going to be uploading over the next couple of days. My next video will be on Sunday. So I just wanted to let you know. That's why today was a bit of a longer video, because I wanted to make sure you have all of the information, my whole plan that's going to be relevant for the next couple of days. If you do want more live updates, I'm still going to be posting in Discord. If I have any alpha, I'm still going to be updating you guys there. There are a couple new tokens which I'm going to be speaking about, also covering some of my DCA strategy and stuff in more depth. So if you do want to become a part of that community, there's a link in the description below. One of the coins that I mentioned earlier that I've recently spoke about, that I'm quite bullish on, that whole thesis is there. I continue to add that coin as I think it's going to be one of the best AI performers over the coming weeks and months. And yeah, that pretty much wraps up the video here. Hopefully you enjoyed, found some value from it, and I will see you in the next one in a couple of days. Have a lovely rest of your day and a nice weekend. Peace out.